I will tell you, if you're interested in learning a little bit more about what we were talking about, I would encourage you to go over to the Wall Street Journal website and take a look at that investigative analysis that they have done in multiple parts over the course of the past couple of weeks. It really will just cause you to shake your head. I mean, this is obviously a political season, 2 weeks before the elections, and a lot of talk about politicians. And I think I speak for a lot of Americans who say that they are disappointed in the quality of the individuals that are running for office these days. And so when you look at the investigative piece that the Wall Street Journal did, it is just shocking to sort of read what the data showed in terms of not behavior of the politicians, but of the federal officials that are all up in Washington that are running these departments. Some really disturbing stuff, and we certainly spent a lot of last segment rattling off some of the conclusions that the folks at the Wall Street Journal had based upon analysis of some pretty extensive data of the trading patterns and the financial disclosures and emails of what was going on or the behavior that federal officials were engaging in. In a word, pretty shameful. And I think hopefully this might start a conversation of how you might be able to keep those federal officials a little bit more accountable than what they have been. That is for sure. So we encourage you to check that out for more information, or if you've missed any of those details, don't hesitate to check out this program on a podcast platform, because we will be obviously putting it on to the various podcast platforms tomorrow. So you'll have an opportunity to kind of listen in on that again. But certainly some very troubling trends, if you will. Speaking of trends, we talked a little bit about market volatility, and appropriately enough, one of our most recent blog posts talks about some of the things that you need to be considering from an investment perspective in terms of creating an investment portfolio. So we thought in this segment, we would sort of hit the highlights, if you will, of what the overall content of the blog post is. Of course, if you want to learn more or listen or read more of the details for the blog post, simply go to our website, nelsonfinancialplanning.com, and you'll see the full blog post. But that post talked about some of the basic parts of creating an investment portfolio, right? Pretty timely, hopefully timely. Think of it as timely information in a volatile market. And so the first thing, I guess, in terms of creating that investment portfolio is you have to decide what you want out of it. What's your investment objective, if you will? And that deals with thinking about things like risk tolerance, your time horizon, and understand that you can have different risk tolerance and different time horizons for different parts of the portfolio, right? I mean, some of the stuff may be more longer term. Some of the stuff may be more shorter term. Important to have some, perspective in terms of performance and performance expectations in terms of what that looks like. So it starts with, okay, well, what do I want? What's the objective here? And then from there, you would shift into, okay, well, what should I invest the money in? Well, there's a slew of different options. Usually it boils down to stocks, bonds, cash, mutual funds. Mutual funds, basically just different collections of stocks or bonds. The difference between stocks, of course, higher return, more volatility, bonds, lower return, really low return this year, particularly as interest rates are really moving up dramatically. Some of the performance of these bonds, whether it's tax-free munis or general bond funds, is just a disaster this year based upon how much interest rates have been going up. But that's a decision, right? That, what should I invest in? How much in each percentage? How much do I keep in cash? Things like that. And then deciding how to fund your investments, right? Do you do that on a regular basis, or do you do that as part of the overall approach of having it saved on a monthly basis as part of your paycheck. Some of that is thinking about setting goals. What do you want to accomplish? Creating a budget is a great way to try and find money that might otherwise be hard to find, and deciding where and what to invest in. Is that an IRA account? Is that an after-tax account? What, in fact, does that look like? So those are some of the things that you'll need to consider, and in terms of creating that investment portfolio. And then lastly, it's, sort of how you do it, right? Time in versus timing. Most important concept that we like to talk about is make sure to pay yourself first. I think all too often people think about investing as, I'll do that. That's the money that I have at the end of the month after I've spent it on everything else. That's the piece that I'm going to invest. No. You want to pay yourself first, and then that way you know that it is getting done. Dollar cost average, great strategy. Dollar cost averaging, putting money in on a regular basis. The team here at the office, Zach and Chet on our Instagram channel have had a couple of different videos about that of late, so we encourage you to also kind of check that out over on that platform. And then understanding how to take the money out, right? How to be tax efficient, how to have the right approach and strategy to take that money out. Anyway, so that's the concepts, if you will, on how to create an investment portfolio, all described in much greater detail on our blog post. So make sure you check that out at nelsonfinancialplanning.com. The reality is that these blog posts sort of start to scratch the surface of what people need. The reality is that a lot of folks need basic financial education, and financial education that, in fact, is so structured. In fact, 88% of adults polled think a semester or year-long personal finance course should be required for high school graduation. You can certainly put me in that 88% category. Those are the kinds of life skills that might be useful versus some of the other stuff that gets taught in our educational system. Certainly a personal finance course that talks about spending and budgeting, that talks about cash flow, that talks about managing credit, that talks about saving, earning income, investing, managing risk, things like that. A very high percentage of the population really is clamoring for ensuring that the next generation is more informed than them as it relates to their finances. So hopefully, speaking of the politicians, maybe that's something that they could actually do that would be worthwhile, of ensuring some kind of a real learning opportunity, if you will, for finances and budgeting and how to save money. I guess stay tuned on that one. Anyway, we're about running out of time for this week's episode of Dollars and Cents with me, your host, Joel Garris of Nelson Financial Planning. If you liked what you heard and want to learn more about how our team of certified financial fiduciaries at Nelson Financial Planning can help you change your life with a successful and cost-effective financial plan, go to our website, nelsonfinancialplanning.com, and fill out the Contact Us form to set up an absolutely free conversation. Or, in the alternative, you can actually just pick up the phone, call the office, 407-629-6477. We still got humans that answer the phone. Isn't that amazing? And remember, we don't believe in account minimums at Nelson Financial Planning, because our purpose is to help you get a financial plan with better results at a lower cost. Thank you all, and enjoy the rest of your Sunday.